All right, guys, SM Trader. We're back at towards the end of the trading day. Just want to show you guys how I did today. So here we're looking at the M and Q. So we could see like right at basically 4:30 in the morning. We got the signal here on the world's most accurate indicator to take this up, right? And boom, it came up above the threshold. Beautiful trade. This is the 39-minute chart. This is a 39-minute chart. Each candle is 39 minutes. This was a huge trade, right? And then we get the signal, the big squeeze to take this thing down. We got our confirmation signal here and the world's most accurate indicator. Take this sucker down and you have been in this the entire day. Making money easy, easy. Now, what did our dashboard look like? Okay, look at our dashboard. When this thing fired here, you can see that we had distribution all the way out on the legacy trend, the 4 hour, the 2 hour, the 1 hour, 30-minute, everything fired. Okay, everything fired to the downside, and you know, on the I term, you know, the I term bearish here. Let's go back and let's take a look. Let's take this down to the 1 minute so you can get a bird's eye view of the L term, G term, and S term. All right, we can see that S term. That S term is bearish. We know that this, and then we got some neutrality in the G term. We already got bearish sentiment in the L term and the G term. We know that this thing is going to head down today, that this confirmation on the I term, that what you're seeing on the I term is going to be backed by all of this here on these other terms to push this down. And let's take a look at our big squeezes here. Okay, so we could see as far as trading activity, we had moderate trading activity. All right. Let's look at, you see this trading activity right here. Okay, that trading activity right there is right when this thing started to push down. Everybody jumped in here. Okay, let's see. Here's another spike here. Okay, so we had moderate trading activity here. Nice big spike there. Then it kind of settled out a little bit in that little chop right there, and then this is telling you that they're jumping back in to take this to the downside. So this was that momentum heading up here. Okay, see that spike right there? Okay, momentum heading up. You take this up right here, it settles a little bit, and now they're ready to take this thing back down. The up move, momentum up, continued momentum, and then the trade to the downside. Once you see this other spike, you know you need to be active in this, right? Let's change this chart. Let's go down to the let's see, you know what, actually let's change this one to the 39-minute, and let's look for our big squeezes. See when this triggered here. Oh yeah, beautiful, beautiful squeeze right here. Okay, look, keep your eye on this chart right here. Okay, squeeze right here, and then boom, this thing fires. Okay, it fires, and we also have the world's most accurate indicator telling us that, hey, the bulls are going to take this over even before the squeeze triggered. Okay, but that's your entry, and then we get another squeeze right here. Okay, so you're going to take your exit on this first red dot. You let your squeeze complete, and then boom, you fire to the downside and you take this down. And again, this squeeze is not the TTM squeeze. Okay, this squeeze is based out of chaos. From chaos comes order. So you see this right here, right? As the price comes up, it comes down, it goes, there's this boom, 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 indecision, okay, indecision, and then trend. This one candle, two candle, three candle is chaos. That's chaos. From chaos comes order. So we had chaos here, boom, order, price goes up. We have chaos again, okay, boom, order, price goes down. All right, so the mathematics is completely different from the TTM squeeze indicator, which is based off of a low volatility state. And those, they're both very good techniques. So one is somewhat of a resting state, and the other is, you know, in the theory, you have two theories. They don't oppose each other. They're just different. You can look at them differently. So one is the TTM, the theory of a low active environment is going to lead to an explosive move. And then my theory is when you have volatility, okay, and indecision, an indecisive volatile environment, it leads to order, okay? Chaos, from chaos, order will follow, okay? And then it will go back to chaos, and then it will go back to order. So, and this all ties in, the chaos order theory ties into the Forex master pattern theory, you know. So yeah, but there you go. That was the trade today. I mean, just literally 2 trades. So you remember when I told you guys the 39 minute drives all the time frames, pulls the time frames underneath it. This is the one I'm talking about. Okay, 2 trades, 4:30 in the morning, boom, you're in there, and then 9:06 a.m. all the way down. 2 simple trades. That's it. You made tons of money, and your life is great. And all you got to know is all that information that I did in the prior video. If you're watching this video, watch the video just before this one, done today, where I explain market structure. Okay, you have market structure behind you. You know exactly where this thing is going to go. All right, guys, I'm out. Take care.